Well, soft commodities have been having a very good run lately, in line with the strength that we're seeing in metals and oil as well. But some analysts are warning the rally will soon come off. Should you start to turn bearish on the soft commodity sector? Joining us now with his perspective is Nirgunan Tiruchelvam, equities analyst at ABN AMRO Asia Securities. Nirgunan, thanks so much for joining us today.
Thank you, Maura.
Why are you beginning to say, hey, hold on, we should start to approach soft commodities with some caution now? Is that because of the rally that we've been seeing so far and things might be getting ahead of themselves?
Well, one of the principal reasons, Maura, that commodities, soft commodities such as palm oil and soybean oil have escalated has been the need for biodiesel and ethanol. Our view is that even at the elevated price that we are seeing at this moment for crude oil, biodiesel and ethanol are both unsustainable because the feedstock costs are so high.
Okay. But nonetheless, though, I mean, earlier on I was talking about cocoa prices. It's going to cost us more to buy a cup of hot chocolate or your mocha latte as well, right? You're talking about not just, for example, corn or wheat. These seem to be the sort of the mainstays, but other soft commodity products may also be reaching sort of levels that are too high for now?
That is precisely the case, that with every commodity boom, the producers of that commodity will adjust their production so that the supply catches up with the demand, and that's what we are seeing in palm oil, where there's been very aggressive planting in Indonesia as well as in Malaysia.
Nirgunan, you say that we're going to see a pullback in palm oil and soy because out of all the soft commodity complex, they're the most overvalued. How sharp do you think that correction will be then? I know that I know that you say it's going to come at the end of the year, but how sharp is that pullback going to be in your sense?
Shri, our view is that the pullback in the soft commodities, principally palm oil and soybean oil, would be to the magnitude of between 20 to 25%.
Okay, can I just ask you about, is a lot of the rally we've been seeing so far because our previous guest talked about how a lot of investors, a lot of managers right now are sitting on cash that they want to put to work somewhere. They've been pouring it into sort of alternative investments because they can't find value or they can't find returns in the equity markets right now. So is that one of the reasons why, with all this hot money running to commodities, we've been seeing the prices going up, and therefore volatility is going to be a factor as well? Are you worried about that?
That's certainly the case. A number of the players in the commodity market are people who are not purchasing those commodities for the use of those commodities, but they are hedge fund investors who are using their extra cash to bolster their returns.
Nirgunan, let's get on to the stock picks, because you've come up with some names that you would be a bit more cautious on in this environment where you are looking at a correction. Pure palm oil producers won't do well, you say. Why is that?
The pure palm oil producers will suffer a reversal in fortunes when the price of palm oil corrects. There is already evidence that the price is correcting, and when that happens, the prices of the palm oil producers such as IOI and KLK will suffer. We expect a correction of about 10% in IOI and a correction of about 20% for KLK.
Would you say then that it's probably better to be in the diversified producers as opposed to the pure palm oil companies?
I would certainly agree with that. The diversified producers that we have in mind are companies such as Wilmar International. Wilmar International is the preeminent processor of palm oil and soybean oil in this region, and they will actually benefit from a correction in prices because they are a processor of that commodity, and the downstream products will actually improve in prices if there's a correction in the palm oil or soybean oil price.
Nonetheless, though, although you talk about how there's going to be more supply coming on the market soon for some of these commodities, the fundamental growth picture in demand is still there, right? That is still intact. It's just a matter of supply coming up to balance the market. I mean, I want to get an understanding from you as to the main drivers for this correction that you're seeing. So is that right? That growth in demand is still going to be there?
The growth in demand is still going to be there. There's no doubt about it.
And that's coming mostly from the emerging countries? Okay?
Yes. China and India in particular, who constitute nearly 40% of the world's population, are at the cusp of a very aggressive increase in disposable income, and that's where the demand is coming from.
Nirgunan, You know, one of the stories that we've been following very closely today is obviously the mining industry. We've seen a lot of consolidation there. What sort of corporate activity, if any, do you see happening amongst the palm oil producers? We have seen some consolidation themes playing out last year. Do you think that's going to be a space that we're going to see more corporate activity or less?
There may be some prospect for corporate activity given the strong balance sheets that the palm oil producers have. In that regard, there may be acquisitions or consolidation in the palm oil producing market here in Southeast Asia.
Okay, Nirgunan, thank you so much for joining us. We appreciate it.
Thank you, Mura.
That's Nirgunan Tirachelvam, Equities Analyst at ABN AMRO Asia Securities there.